Welcome to Hash Wealth Crypto. My name is Mian Shah, and on this channel, you get to hear my two satoshis on building wealth with crypto. So, as we know, we are in the mid of a raging bull market. Today is 9th of May 2021, and just want to talk about what we should be thinking about, what our approach should be, because we know the market is not gonna go up forever. At some point, we're gonna hit a bear market. I mean, there are talks of people saying that this might be a super cycle and the bull market might go on for a very long time. I personally don't agree with that. I think the human psychology is gonna play an important role and we're gonna hit a bear market. So we want to be prepared for that. And what should be some best practices in order to do that? So let's be frank here. How do we know when is gonna the bull market top out? Nobody knows. I don't know. Nobody knows at all. The best we can do is to guesstimate it based on previous bull cycles, looking at the patterns that we observed there, and also look at different models such as stock to flow and see where we are there. This is really important. It's really important to have an exit strategy and execute it. It's important because I've seen tons of people, and you hear this all the time, people who invested a bit of money in the crypto markets became millionaires and didn't cash out, did not exit the market, and in the bear market went all the way down and sometimes even losing their initial capital or part of it. So that would be devastating for any investor at that point. So we don't want to be that. We want to have a strategy in place and execute it, and we want to be rational about it and not take too much of that hopium, as we know in the crypto space. So here we are on TradingView, and let's look at, so this is a daily chart of Bitcoin versus US dollar. Okay, and we can see all of the data here in candles. So right here, we are today at about 57,000, 58,000. We've been in this accumulation range for a while now, somewhere between 55 and 60,000. All right, so let's look at the previous cycles and what happened right before the market tapped out, because that might give us an indication of what also might happen this time. As we know, history doesn't repeat itself, but it often rhymes, and that's what we're gonna look at. So this is the 2021 bull cycle. Let's go to, this is the 2017 bull cycle. This was the tab right there. Sorry, now this is not the 2017, this is still 2019. This is the 2017 top of the bull cycle right here, close to 20,000. Let's even go before that. I want to go to actually 2013 bull cycle and somewhere there, because although right now it looks like a blip in the chart, but at that time it was a full-on raging bull cycle. So here we are, and we can see that on 10 July, mid-year in 2013, prices were what, $50, $51, just around that for one Bitcoin. And then we hit a bull market, and you see what's happening here. There are obviously small corrections along the way. Okay, some cases they were not really small, they were pretty significant, almost 50%, 40% corrections. And then there was like a parabolic run, you see right there. Okay, and right here we topped out the bull market close to 1150, and then a bear market hits and we go that way. So from the top right here to the bottom, we're looking at what, 1150 to about under $200. That's a big drop. Now it might seem laughable right now, thinking that Bitcoin, okay, it went from what, 1200 to 200. We talk about 60,000 Bitcoin today. So that's kind of laughable at this point. But at that time, obviously, it was a big deal. It was a big crash. A lot of people kind of left the market, sold at the bottom, and all those things. That's why we say that if you believe in Bitcoin long term, then none of these crashes and bull markets should matter to you, and you should just invest in Bitcoin and look at it after 15 years, 20 years, right? And you would be hugely in profit, and just it wouldn't matter for you all these details. So here we are, 2017 bull market. This is where actually I got involved for the first time in crypto, and we're seeing with under $1,000 Bitcoin. Okay, so close to the top of the previous bull cycle, which was about 1150. And as soon as we cross that, obviously fueled by the Bitcoin halving event, we enter a new bull market. Okay, and here we see that we have corrections many times. Here we are, what, 4 times of the top of the previous bull cycle, or the start of this bull cycle. And here we are, what, 8,000 Bitcoin, and then we go crazy after that. And the last rally that we have is the craziest one, where we go from 10,000 to 20,000 in a very short duration of time. And we've had many corrections along the way, and people think even the dip that actually turned out to be the crash, right? People still were thinking that this is just a dip, and they were buying the dip right here, and then it did go up a little more, but then of course it crashed even further, and that signaled the start of the bear market. And here we were in the golden accumulation zone. This was perfect if you bought right here, anywhere from 3,000, 5,000 per Bitcoin. Now again, just like history rhymes, now when we zoom out and go further to this current bull cycle, even the 2017 bull cycle looks like a blip. So as soon as we crossed the top of the previous bull cycle right here, okay, and that was in January of 2021, that triggered the start of the new bull cycle. And here we are today. We tapped out roughly 64,000, 65,000. And today we are at 58,000. So the moral of the story is that if you want to invest in it long term, like you should, then in that case, none of this matters to you. Just keep investing, keep dollar cost averaging. So DCA is the time-tested and proven strategy that works really well. However, if you're like me and you want to exit some or most of your positions at close to the top of the bull market, then you would want to keep an eye on these indicators and keep analyzing them to sort of guesstimate when the top would be. In my personal opinion, we are not at the top or even close to it. I think we're right in the middle of the bull market. Right? So let's look at this stock to flow model. Okay, so you see here, this blue color on this chart indicates is when the halving happens, right? Halving happens, and then this red is when you have almost 1,400 after the next halving. If you look at the history, it was always the case that the stock to flow model chart and the price in almost all cases overshot the prediction of the stock to flow model by a huge margin, right? And when that happened, then it corrected itself and went below or at the stock to flow model. So that happened in every bull cycle that we've had so far. And that happened also in 2017. So if you look right here in this blue color, we overshot, went close to 20,000, and then of course we corrected. And at this point, we even went below the prediction of the stock to flow model. Now that was obviously a good buying zone. And here we are currently at the stage of the bull market, and we can see that we haven't even reached the prediction of the stock to flow model, which is just over $100,000 per Bitcoin. So if history rhymes, what we're going to see is that we are going to approach that. We're going to overshoot it by a significant degree. And if we look at the price chart here on the left, that would put us anywhere between 200, 300 US dollar per Bitcoin. And at that point, you would want to be really careful and take profit. Or even before that, it's really important to take profits. Remember, nobody ever went broke by taking profits, right? So just like DCAing into your position is a good idea, DCAing out of your position is also a very good idea, right? So every week or so, you keep selling some of your position, and that way, you're de-risking your position. And in the event of a black swan, in the case of a black swan event, you'd be safe and you would have taken profits, and you can sell also on the way down at the top of the bull cycle. So my message to you guys, obviously not financial advice. Okay, anything I say, don't consider it financial advice. This is just me talking about and blurping about what I think about the crypto market. So I think that it is a very good idea to keep an eye on these indicators and plan your exit strategy. And DCing out of your position somewhere, August, September, October, this year, 2021, would be a good idea, because based on these models and based on the history of the previous bull cycles we see, we can expect the top of the bull cycle right around towards the end of this year. But hey, if you're up on your position, I don't know, 10x, 5x, if you're significantly in profit on your position, it's never too early, or it's never a bad idea to take profits on that. Because remember, it's not about how much you gained in your positions. It's about how much you end up keeping. See you next time. Adios.